G'day guys, happy Tuesday. How is everyone today? I'm going to apologize straight off the bat if I sound like I'm a little bit flat. I'm trying to keep the energy up, but I just feel a little bit off today for whatever reason. Just not 100%, so I'll try and keep the energy levels up. I'll give it my best shot. Just a reminder, guys, we have CPI tomorrow. There's still a great opportunity there to grab some My Funded Futures or Apex evals using code Jimmy at a very good rate right now, particularly the Apex accounts. But if you're talking about total cost from eval to funded, then you actually can't go past My Funded Futures. So My Funded Futures starter plans, if you look at the 50k eval, starts at $80 or $76 using my code Jimmy, and then there is no fee to funded, so it's actually the best value on the market. But obviously, if you are inclined to want to trade more than 3 accounts, 10, maybe 20 accounts, then Apex is your best bet for that. So just keeping in mind, we have CPI tomorrow, so that's going to be a great opportunity to try and one shot, one kill some evals. I will be having a crack at some Apex accounts. I'm going to try and do 5 of them and see how we go. All right, let's get on with it. I'm also going to discuss today the CL long trade I took yesterday. Probably a little bit controversial, but we'll break it down and see what we can get out of it. All right, let's have a look where we always start. That is the calendar. All right, so no news today. Same approach as yesterday. We just go into the market nice and patient. We look for the right setup. If it aligns with all our entry requirements, then we execute. If it doesn't do any of those, then we just sit on our hands today, knowing that CPI is tomorrow. There is a good chance that we may just see consolidation today. So it might be a little bit choppy, possibly seek and destroy profile, but we'll have a look and we'll get down to the lower timeframes and see what the lower timeframes are telling us as well. All right, let's move on over to the chart. We'll start on NQ. We are here. Obviously yesterday, we can see here our bias, we had bearish for NQ, bullish for ES. One of those was always going to be wrong. I was using this FVG here on NQ as my recent information because that failed. Then we had nothing here. There was no internal or external liquidity through this leg. So until this level here, if we mark that out, that would have been the nearest liquidity level. Therefore, I had a bearish bias. Obviously, NQ and ES are correlated, so one was going to bring the other with it. Yesterday, ES, we had a bullish bias. The bullish bias played out. Anyway, needless to say, let's look at the most recent information we have for today. And in doing so, we created this bearish FVG when we closed yesterday's price. What have we done today? We've tapped into that bearish FVG, therefore internal to external is what I would be looking at today. So price moving from internal there to external. All right. So remaining bearish on NQ. So we'll leave that tag as is. And let's have a look at the hourly. So on the hourly, we did have our ideas play out yesterday because we did have a bearish bias, but on the hourly structure, whilst order flow was bearish, we were looking at this here as a potential reversal. So here we had a change in the state of delivery. We also have this level as a bullish breaker. Aligned with that is an FVG here. And this was our hourly bullish unicorn. And if you watched yesterday's video, we had that drawn out, which looks like this: down, up, down, through. So this is our stop hunt. And price respected this bullish breaker and has continued to respect our bullish change in the state of delivery. So what do we have to note today that might see prices move lower? Well, one thing to note is if we pull up ES, and I did check this out earlier today. I'm just going to clean that chart up. So through these highs here, we do have an SMT. So ES created a lower high. So that could give us an idea that price might want to move lower with our bearish bias. And then we would also want to see, get rid of ES now, so we have the SMT at the highs. There's no SMT at the lows. It's the similar correlated type setup on the lows. Are we going to see potentially a bearish breaker? If price can push through this breaker, leaving displacement and closing below, that will give us a bearish breaker. We don't have a conforming change in the state of delivery just yet. We don't have displacement through any of this leg. This may end up being our change in the state of delivery here if the next hourly candle closes and leaves this gap. Okay, so we'd need to see a gap left here for this to be a valid change in the state of delivery. So there is potential here for price to move lower. The other thing to note is that both NQ and ES respected this hourly bearish FVG. So price was unable to displace through that level on both NQ and ES. So we may continue to see lower prices here, and if we zoom out a little, we can see, you know, that trend. It really hasn't been broken yet. We haven't broken through this. We're still in a downward trend, so order flow is still bearish. Let's have a look at the 15-minute, see what our London highs and lows and Asia high and low look like. So we have Asia and London highs open at the moment, which is interesting. That could be a good draw on liquidity if we had a bullish bias. So we'll be watching this space. So interestingly, and just because we're on the chart here on the 15-minute, ES has actually taken the London high and the London low, plus the Asia high. We've taken Asia high, Asia low, and London low. So we're potentially looking at a S&D profile. With prices going to be able to come back and take out the high here and then come back into the range. And like I said, we do have CPI, so anything's possible there. We can use a seek and destroy profile to our advantage by trading from the extremes of the range. So here, for example, you might look to trade back to equilibrium, and midnight's very close to equilibrium here. So you could look to do that. If we do reach higher and take out the London high, then we could look to trade back into equilibrium. So let's have a look at the daily. Okay, so ES did find support here in the daily bullish FEG and pushed higher. So our next liquidity level is this internal up here, and then the highs. You can see that SMT we have on the daily here as well. So yesterday's high is lower than today's high so far on NQ, whereas on ES today's high is lower. So there is an SMT here. Will NQ pull ES down? I'm going to stay neutral on ES. And then as the day plays out, I can reassess and see what my options are. Using this internal, we would be looking for price to move higher though. But with the Kraken correlation, then I just want to remain a little bit more cautious. So on the hourly, again, we pointed this out yesterday. We had a similar setup here on ES to NQ. ES respecting this order block when it came back down. So we've got bullish breaker, bullish order block. Change in the state of delivery. So price has to disrespect these areas in order for price to continue bearish. Overall, the order flow has remained bearish, and we can see that by literally just running a trend line down. We've been able to push higher, and although we were looking at this as a reversal yesterday, as I pointed out on NQ, we can see here that ES also was unable to push through this bearish breaker, this bearish FEG. So it was unable to displace through. It has tried and it's failed on a number of occasions. All right, let's have a look at 6E. So 6E, we had a bearish bias going into yesterday, and our bias played out, and today our bias was completed. So the swing low also aligns here with this bullish FEG, which is now completely filled. So looking for price to move higher today on 6E, and we'll check Euro futures as well. Euro Forex as well, just to see if they're aligned and make sure it's a similar picture. But looking for price to reach up into this internal level. So external to internal. Let's have a look at the hourly. So we do have a small gap here. It is there, so we do have some displacement. Therefore, this level here would be a change in the state of delivery, a bullish change in the state of delivery. Price broke through that level and is now retesting that, so it'll be interesting to see if we can get back above there. This is not a breaker. This candle is not a breaker. I was looking at it to see if it was. It looks like that's a low, a lower high. So the high on that candle is 10430, 10415. They're both the same actually. 430, 430. So they're both exactly the same. But I wouldn't use that as a breaker. So we have our change in the state of delivery. Price is actually, while we're watching price here, is starting to try and push back through. So we'll keep an eye on that. So bullish on Euro futures. And we've obviously created some nice high resistance liquidity through here. And then we have low resistance liquidity and these lovely equal highs up here for a draw. So, and again, all this low resistance liquidity. So plenty of liquidity up here for price to reach for. Let's have a look at gold. I'm going to leave oil to last so we can have a look at that trade. So gold's still chopping around. The only thing to note really is that gold continues to respect this bullish FEG, although it's not really doing much from that. It's certainly not displacing from this FEG and reaching higher. It's just chop. I'm still going to remain neutral on gold. I'm not interested in trying to find something on gold at the moment. It's just not doing anything until we're sort of out of this range and gold proves what it wants to do. I'm not interested. Have a look at the hourly. We can see gold respecting this bullish order block here. And also respecting this bullish order block. We also inverted this hourly FEG here. And we did get a close through this bearish FEG, but price has come back in. It's actually testing this order block, which looks like is also the consequent encroachment of the FEG. It's perfectly aligned. So that's interesting. So price is retesting that level again. So we may actually see price bounce from here and move higher. I'm going to look at Dixie now. So I think on Dixie yesterday when we were looking at the chart, this candle wasn't quite through this FEG, but I did point out that it may invalidate it, and it actually did invalidate it. Therefore, looking for price to reach to this external. Which is also pretty well aligned with this internal. So that would be my target area for Dixie to move higher. We can see we've tapped back into this gap here. We've actually created a balanced price range here currently between this bearish FEG and we have a bullish FEG. It's not yet confirmed, I realize that, but we do have liquidity pulled here and we have this balanced price range. So bullish for Dixie. We do have a change in the state of delivery through here. We have displacement off this leg higher, And price currently respecting bullish PD arrays, so we'll keep an eye on that, see if price can get its butt up a little bit higher. Okay, let's have a look at Forex. So just scooting out to the daily. So interestingly enough, on Euro USD on the Forex pair, price didn't reach for this external like it did on the futures contract. However, price is still respecting this bullish FEG. So bullish for us here on GBP now. Let's have a look. So we had the bearish idea. This played out beautifully. So we were bearish yesterday, looking for price to reach into this bullish FEG, and it did so, and it's started to bounce from there. So that's really perfect to see. I love to see our concepts play out. It's a perfect example. So bullish today on GBP, and looking for external. We'd be trying to reach higher. Not saying we'll get there today, obviously, but this is our internal to external. If we have a look at the hourly, we're also getting have a change in the state of delivery here. I like this level here. So bullish change in the state of delivery done with displacement. Price is respecting now this bullish FEG here as well on the hourly. We have high resistance liquidity. And plenty of low resistance liquidity. All right, let's step back to futures and have a look at, let's not do that. Let's have a look at CL. So CL, yesterday, I did have a bearish bias. And if anyone saw any of the information I've put on Twitter or in Discord, I actually took a long position. There's a couple of reasons for that. So when I was looking for bias yesterday, the question I was asking myself was, okay, well, how far does price have to move past a recent level, being this external level here from June? How far does price have to move past that before it's invalidated? And because in my vision or my view that I thought price had moved past, we had quite a aggressive wick here on the 5th of September, and then we were bearish again. My idea was, okay, well, I think we're going to reach for this external level. So that was my initial idea. But then as the morning played out, we were respecting this change in the state of delivery, and I felt we had a potential for price to reverse. So I did flip my bias, albeit temporarily, but I did like the position that I took. And again, this comes down to being an independent thinker, as well as sticking to your trade plan, which I probably did move away from that slightly, but there was just a couple of things that I was interested in, and I liked the idea of the position. And if we drop down to the 5 minute, which is where I took the position, so we had London high up here. We also had price sitting below midnight. And this was our setup through here. Now, I didn't really consider this candle. And if we go to micros, because that's what I actually executed on, you can see the setup here. So micros, although very similar to minis, do vary somewhat from time to time. And you can see this 935 candle on micros has zero body. So I chose to ignore that. When I first looked at the setup, this was my idea. So it was low, high, lower low, and then we were looking for that displacement. So that was our setup. Okay. But when it came to the breaker, I didn't like this large wick and there was no body. It was just ugly. So I chose to just use this candle on its own rather than the two consecutive candles, which is why I was able to achieve I think I got 2.4 R out of it. I pretty much closed at midnight. That was the level I got out. I was targeting the London highs, which you can see did play out. And the reason I got out at midnight is because it was 1 a.m. in the morning for me, and that's enough for me. Reached that level and I was calling it good night. So price obviously retraced back before getting to the London high. So my exit was on this candle here. That was where I got out on this candle. And I would have had to sit through drawdown all the way back to the breaker before eventually reaching the London. So I'm pleased I got out when I did. And I don't always take 2R. I try and trail my stop where I can. So I liked that I got out at this level, especially with midnight being an important level. Price will react there, and you can see it did exactly that. And even when it came back to midnight after retracing, it still struggled to get through. So, it wasn't an A+ setup, particularly because of the way this breaker was, but I liked the reaction we had at this level here, these two candles in particular. And I've also got a buddy of mine who has some data that shows that when you get the third candle here as a down close candle that forms the FVG, it also has a higher probability of playing out. The other thing that got me into this trade was that we inverted this FVG here. So it was a single FVG on the leg that took liquidity, and then we inverted that. So I was more inclined to take this position because of that inversion. So I hope that does some justification as to why I took the position. Not everyone's going to take that position. It wouldn't align with everyone's trade plan, no doubt. But in any case, I did take it and it played out on this occasion. So looking at today then, what are we thinking? Well, we reached higher. We've failed to really displace here, and price is now coming back down. I'm still looking at this level as a target. I'd still like to see this low taken here. So bearish today on oil. And you can see here that this on the hourly, the bearish FEG here just cannot be pushed through. It just won't be broken at this stage. It seems to be too strong. Price perfectly respecting the midpoint of that FEG. We have this low resistance liquidity through here and high resistance liquidity aligned with this bearish FEG. We have a small displacement through that level here. If I just clear this FEG up, high, low, higher, high. Breaker plus FEG aligned. So here we have a bearish unicorn on the hourly. We can run our projections off of there, and we can see that this low resistance liquidity here is perfectly aligned with the -2 to 2.5, and the level of interest that we're looking for price to reach to is aligned with the -4. So bearish overall on CL. Rightio guys, I am going to end the video there. I hope you got some value today. Please let me know in the comments if you're getting value from the videos, if there's anything else you want to get out of the videos. I'm really after feedback. I want to grow this channel. I want to grow with you guys and continue to provide as much value as possible. So any comments, it all helps. It helps the channel grow. Please share the channel around. Please like and sub. Really trying to get to 500 subs by the end of September. That would be amazing. That's my target. So if you can help me get there, that would be absolutely awesome. All right, guys. Again, please like and sub. Don't forget about the eval expediting tomorrow for CPI. If you want to do that, I'm going to give it a crack myself. So we'll see how we go. Have a great Tuesday, guys. I will catch you in the Discord. Feel free to message me, leave your comments, and I will see you tomorrow. Bye for now.